Good morning, welcome to this update from Phoenix Blue on Monday the 26th of September. I'm Tom Collett and I'll talk you through the markets and the news this morning. Last week, as you're obviously well aware, we had three central bank rate announcements, none of which led to any rate changes. We had the Fed, the FOMC meeting, rates held, and a statement which suggested that the economy was doing quite reasonably, but they were looking for further confirmation before actually raising rates. Suggestion from that was that we will have a rate rise potentially in December. The reason December is there's no meeting in October, and in November the meeting falls bang on the date of the presidential election. There's no press conference arranged, so we don't expect to see anything there until December. Now that gives plenty of time for the data and events to drive the decision one way or the other, and I'm sure we'll see the markets reacting to the data as it comes through to the presidential election, etc., etc. At that meeting there were 10 voting, 7 voted in favour and 3 voted against. Surprisingly, one of those who voted against, Eric Rosengren, had previously dissented, voted against in the opposite direction previously, not necessarily recently, but he had a view that there was further easing needed historically, but now going forward he has a view that it's time that rates need to rise. So an interesting change there, and all pointing towards some more disagreement within the committee at this moment in time, which putting pressure on the committee and Janet Yellen to raise those rates. We had the Bank of Japan, who held their rate. The only thing they did was change the criteria they're using for the quantity of easing measures they're actually undertaking at any given time. The Reserve Bank of New Zealand, they also held rates, but there were hints within their statement of a rate rise imminently, not at this meeting. That led to a bit of a sell-off on the New Zealand dollar, and we'll see that on the charts as we go through. Now over to the news. Yes, last week it was all about the central bank rate statements. This week it's all the follow-up speeches, testimonies to Congress, etc., etc. We have 8 speeches from the chairman or the president of the central banks. There were only 7, but this one was dropped in this morning on my list. Bank of Japan Governor Kuroda speaking at some point this morning. It's a tentative one. The big ones to watch out for are ECB President Draghi speaking to the European Union on Monday, later today. He'll also then speak to a closed session of the Bundestag, which is the German Parliament, on Wednesday. The nature of that is we'll be waiting for leaks, seeing as it is a closed session on that one, or potentially the text of the speech will be released. I'm unsure about that, but those are clear, important issues there, particularly this meeting at the Bundestag, which is obviously not a regular event. I believe, or I've been reading, that Draghi is looking to try and get the Germans to spend more money to drive the European economy when his easing measures so far haven't been successful. The other ones to watch out for are Janet Yellen testifying to Congress on Wednesday, and she speaks again on Thursday. But all of those you need to keep your eye on, particularly if you're trading intraday, as they have a good chance of creating short-term volatility. We also this week, and it won't be on your list, there's an informal meeting of OPEC in Algiers. This is on the back of another general energy conference, but there will be an informal meeting. We've had these types of meetings before. It's being talked up a great deal. Potentially the main reason for these events is to talk up the price of oil. We haven't on any previous occasion seen any success in these meetings or anything happening, so we will wait to see if anything results from that, but we can expect volatility in oil in the intervening period. Right, this is the US dollar, and this is the chart that really is running all the markets at the moment. All the markets appear to be waiting to be led by the dollar. We had the FOMC meeting on Wednesday last week. As you can see, I've got that date marked here. We are trading very much within this range here, within the consolidation of this triangle formation here. I've also got the US election marked on here. Clearly, that as we approach the election, that's going to have a more significant effect. If we get a clearer picture of a winner or a potential winner, we may see the dollar starting to react to the expected result and breaking out of this range stroke triangle. At this moment in time, until it breaks above this 96.20 level, which we were talking about last week, we are only going to be looking at intraday dollar strength. We need a breakout above that. We've been waiting for it for a long while now in order to confirm true dollar strength in the markets, to look at all the majors and minors. The same is true of the lower area of the zone here, about 98.20 in that respect. We can see over on the yen, US dollar JPY, that we have also a range here. We've been looking for the yen to break above this 104 level in conjunction with that 96.20 level on the dollar index. The only other thing that we'll be interested in watching is the level 100 level hit through here, which forms the base of the range, and also we believe will invoke Bank of Japan intervention again at that level. We can see we've had that level's held to a certain extent here. We've had some breakthrough, so if we do go for this trade, we will be looking for slightly bigger stops than normal. I'd like to see it stop below that level there, if for sake of argument we take a trade at 100. Over on the euro, as to be expected, it's just the inverse of the dollar index. Again, we need price to break out. In the short term, intraday, we can look at trading the top or the bottom of the range. We can look at price action reversals potentially off the triangle if we get to that level, and that follows true in all the markets which are ranging at the moment, of which the Aussie is another one. But this range is slightly bigger in the way that we're looking at it. More scope to trade from the bottom to the top of the range, or certainly trade the reaction at the top or the bottom, or indeed the trend lines of the triangle there. The one currency that seems to be offering us something slightly different following the Reserve Bank of New Zealand meeting last week with the hint of a further rate reduction for the New Zealand economy is the New Zealand dollar itself. This is New Zealand USD. We've seen a break below this trend line stroke rising wedge. This morning we've touched down on this level at 72.15. I'd like to see a break of that level and retest to take this market shorter. If that happens, I'm looking at the same sort of scenario on most of the New Zealand cross pairs. I will also be interested in a price action trade from this level here at 73.15 in conjunction with, in confluence with the retest of the trend line here. But I say that would need to be price action and would only be a low risk trade unless we can see some direction from the dollar, some dollar strength to drive that through. Over in the equities market, well, the S&P appears to be breaking or have broken back into this range we had prior to this period of real volatility we've seen over the last 2 weeks. We took advantage of this early part here and made some very nice profits in that. We'll be looking for price potentially to stay within this range again. But however, we'll be watching the top and the bottom because we have gold in a very similar situation, and I would be looking to see a break in either direction to be matched by a break in the opposite direction by gold. Again, here we can see the range, and a move of these markets back into a risk-on, risk-off scenario. At this moment in time, they have been moving in tandem for a number of weeks now, which is unusual, which just emphasises the degree of uncertainty in the markets that we had exasperated by those central bank rate decisions yesterday. So really the message today is trade cautiously, be aware of all those new speeches, be patient. Let's wait for the markets to give us some clear direction. Without that clear direction, our trades are not so high probability, and that's not why we want to be risking our capital. We want to be patient and wait for those high probability entries to come through. If you like what you see here, and you want to learn more about Phoenix Blue, you can have a pop onto the website, phoenixblue.co.uk. That will explain how we use this 3 types of analysis. We use fundamental analysis, technical analysis, and also commitment of traders analysis. I think we're quite unusual in the fact that we combine all 3 of those in order to provide higher probability opportunities and more accurate entries, meaning that we can trade in normal circumstances FX markets with 40 pips stop losses. Now, if you want to learn more about this in detail, once a month, usually the 3rd week of the month, we have 4 hours free trading with the Phoenix Blue fund managers. We hold that at a hotel in London. It allows you to come along, trade the markets live alongside our fund managers. Also learn a great deal more about how we trade, how we integrate these 3 types of analysis. If you're interested in that, go to the contacts page and leave a message to that effect, or keep your eye on the events page. We're just waiting to confirm the date and location of next month's event. But as I said, that's absolutely free of charge. You'll also have the opportunity to talk to other Phoenix Blue traders who've benefited from the analysis that we use and who've taken their trading on to the next level. Okay guys, have a careful day, a careful week. Let's wait for those high probability entries to come through to us. Take care.